So it's Tuesday, June 2nd. We start the month off, and email boxes still full of sell and may go away. However, I think it might be later this month. We've got the beige book tomorrow. We've got the unenjoyment report, which I fondly referred to it as the unemployment numbers. It's the unenjoyment because if you're typically back in the old days of old when you were on the wrong side of the market and or you put on a day trade and didn't know that that report was coming out, it was pretty much, if you were on the wrong side of the market, unenjoyable. So it was called the unenjoyment report. It also causes a little bit of volatility in the market, and that's one of the things that we are waiting to see. And I think the market's at a hostage state here, tossed between 28 various foreign central bank acts of quantitative easing globally this year alone, 28. The last one was 4 or 5 weeks ago with Australia. And we're balancing that between the Federal Reserve maybe adjusting interest rates for the first time in numerous amounts of years. And in my age, I can't remember. But needless to say, when we take a look at the market's strength in the overall market, we have a lot of different confusing things happening in the market. And one of the things that I think has been happening is we have had a massive outflow of funds in the equity markets. Foreign funds, foreign account holders have sold out, and we're seeing what I call disparity or skew amongst volume and volume indicators, except for maybe one sector, which is the KRE, the regional bank sector. Longer term, this sector looks healthy. From a price, it's in a PPS buy mode. It's been in, if I can share with you a monthly chart of this, this is the on-balance volume indicator with a specific moving average. And as you can see, if volume is true that leads price, notice that it's perking its little head up. Looks like a Loch Ness monster swimming out of the water kind of thing. Might be an indicator. We can call it a Loch Ness monster setup. I don't know, because it looks like the yellow is above the blue line. It looks kind of like it's broken out of its range. And so it actually started to break out of its range before price did. So this is again, day traders, take it easy, monthly chart. We went from a very strong trend to a consolidation, and we're breaking to the upside in both price and volume. So that's the longer term. On the monthly basis, looks great. Weekly looks pretty good in the sense that we've actually broken out on the weekly volume analysis, and the weekly has been breaking out as well in the regionals. And then when we come into the daily, I mean, it's just been one massive choppiness. Now, I've got several indicators in here for design for different things, so don't let that confuse you. The essence of what we're trying to look at is, how does the day-to-day volume kind of look? How does that day-to-day volume trend look like? And the funny thing is, while as strong as the longer term looks, look at the daily volume and look at the price. Okay, so from peak to trough, we have had higher pricing on lower accumulation of volume on the short-term basis. That's a common theme. Let me share with you a few other markets that, to me, just aren't jiving. Now, many of you are familiar with the biotech sector. This is Biogen. I mean, it's almost an index in itself. Typically, biotech, as we've kind of warned, peaks out in March. Now, is it the beginning of the month, the end of the month, the middle of the month? Bottom line, it peaks out in March. One of the things that's a little spooky is that while it had a significant upside rally, this long shadow looking candle, which we would call a shooting star, had followed through the downside, and it's come back to test the midpoint of that range from April. So this is now June, which followed through downside. I get a little nervous that if we take out this old high and we start to break that volume, we'll probably see Biogen back, maybe a 15-20% pullback in that stock. When I look at the weekly analysis, I say, well, is that possible? I mean, what does the weekly volume look like? And here we have a situation that's kind of setting itself up, that we have volume analysis breaking down we are below the yellow moving average lines. The moving averages are pointing down, not too great and positive. Now let's look at the daily chart. While today we note that the market has been kind of grinding sideways, it's been grinding sideways, and the volume action is making newer significant lows. Okay, so in any event, what I'm here to probably tell you guys is that I want you to look at, we formed a low close doji and the highs back in March, posted a high in this market. Last time I saw something that formed a major top like that was in Apple before the 10-for-1 split when it hit 700 the first time around. It was a weekly low close doji. Needless to say, this market is also more, in my view, forming a potential longer-term shoulder, head, shoulder, and from head to shoulder breakdown. Actual measurement technique, if we wanted to use one, I mean, it's subjective. Is it the gap? Is it the high? I always say it's the average area. And if you use that technique, man, that might put you back into the 280 zone, which, heck, that's where we were in November. Is it possible? Well, the funny thing is, if I look at this volume analysis, ironically, the volume has come out of this market and has declined to levels where we were actually back over here, which was close to 310. So, 280, 310, I'd say this is one that really we start breaking down below that 370 handle. I would really be focused on the entire sector. It looks pretty scary. Other names I want to look at with you guys and say, all right, is there accumulation in the market? We know that retail apparel stocks, Philip Van Heusen had some pretty good numbers, PVH, Ralph Lauren was up, but look at this is the gap. And when I look at this and I see that kind of volume trend, when I look at the weekly chart in that type of, inability to follow with the market, there's a lot of stocks out here that I've got some concerns with. The strength in the market recently has been SMH, which is the not internet, but the semiconductors. I know what I'm talking about. We had some pretty good trades in the semi sector, specifically Xilinx and Broadcom, and we stepped off. We got lucky with Broadcom and Xilinx. As we've done, obviously we've done some work, and we were looking for a little wedge pattern and a breakout. While the daily chart, this price action overall trend looks great. Remember the other day I mentioned, hey, I would be stepping off this train ride here. I think we're running out of steam. And one of the reasons that I think we're running out of steam, guys, is as we see this huge increase in price on a daily basis, volume just seems to be it's not showing any new blood. The market makes a new run-up in price, and there's no volume behind it to support the move. So I'm sitting here thinking to myself, while we are been going through a huge upside in the semis, there's no volume participation in this move. Earlier in 2009, we had huge volume participation. So this has been kind of the struggle with the market. Now today, I just wanted to bring to you a few names and you can look at just for example on the scans today. I just did this for you guys live. This is scans generated daily sell signals at 4:03 this afternoon. So hopefully the market caught all the closes. So Intel generates a daily sell signal. It's in that semi space. Now let me show you something. SMH. That's the ETF that focuses on semiconductors. Let's go back to INTC. Notice that semis, the index sector itself, made a new high. Intel did not. Intel looks to me on a longer term monthly chart fairly top heavy in here and did not have a lot of volume accumulation. This is more, has the flavor more like distribution behind it rather than accumulation. So I'm sitting here going like, okay, this is a monthly chart. Maybe it takes a few more weeks. Let's look at the weekly chart and focus in on the weekly chart. Very similar in nature to the Biogen, right? BIIB, in the sense that I'm starting to see this shoulder, head, potential, shoulder, head, shoulder potential pattern. What I'm seeing is a bunch of combinations of things. I've been very bullish this stock market since '09. I've been very bullish up until probably Friday. And Friday we sent out PA stock alerts, and you guys know this is a fact. Market internals are looking weak. And looking at this market, what I'm seeing is more of distribution at the top. If no new money's coming in, and if the institutions that have been long this market, they can't pass the buck off to the public, because the general public's not really been participating, pouring new money in. If you walk down the street and ask people, are you day trading or are you buying storage lockers? I think actually someone did a research on this. There were more hits on Google for storage wars and flipping homes than there were for learning to trade equities. That's pretty bizarre in itself. It's two things. A, people don't have the money to capitalize trading, or B, they're fed up with the market and don't trust it. Maybe it's a combination, which would be C. But when I'm looking at the market for one of the very rare first times is finally I'm looking at some evidence here. And here's what I want to share with you today. Now this looks like something for you guys who are not familiar with this. What you're looking at is 6 stock indexes. And for anyone that has not been around, I'll just name them off to you. On the upper left corner up here, this is the S&P 500, NASDAQ 100, the Dow Jones Industrial Average, the Russell 2000, the NASDAQ Composite, and the New York Stock Exchange, the NYSE. Now, what you're looking at in the middle is a advanced decline, except for it's only in the middle here in the S&Ps, but you're looking at advanced decline, which is a breadth cumulative total of advancing stocks minus declining stocks, and it compares an up day versus a down day on a cumulative basis, if that's the fast way to describe that. Basically, the theory is the more the merrier. In other words, if there's 102 stocks or whatever in the NASDAQ 100, the more stocks that go up in association with a rise in the index move, it's bullish. When the price rises and not all stocks rise in concert with that index, it's not so bullish. And so the same can be said. We have an advanced decline on the Dow Jones Industrial Average. We have an advanced decline over here that we're looking at on the Russell 2000. We have an advanced decline on the NASDAQ Composite Index. And last but not least, the one that the majority of the world follows is this guy right here. This is the one that if you follow the McClellan oscillator, Sherman McClellan uses the data from the NYSE. Most brokerage firms and platforms by default do have a cumulative advanced decline line, no secret. I don't rely everything on the advanced decline on the NYSE. If we did, I think we would have been at multiple times in the last few years tricked into not moving in concert with the market, and because of one major thing. For example, the NYSE, just as the first kind of clue, is the NYSE is broad-based. There's 1,890 stocks, more or less. 68% of them are U.S.-based. The rest are foreign-based. It has real estate investment trust, bond funds, interest rate-sensitive stocks. What does that mean to you? If it has bond funds and bond prices go down, that means it may affect the advanced decline line. Therefore, I don't really trust it wholeheartedly. The funny thing is that while we do have a significant, and it has been in the works now for a little while. What's a little while? Let's take a look. View data window, and you'll see I'll come over here and I'll bring this into you. So it peaked out on or about April 24th. All right, April 24th, the advanced decline peaked out in the NYSE. If I go over here and I share with you TLT, and I go up here and I go view data window one more time, and I go up to April 20th, April 28th, April 24th. There you go. So funny thing is bond prices as represented by the ETF, the TLT, actually declined significantly. So interest rate sensitive stocks, bond funds, real estate investment trusts, utility stocks all caved in. Guess what? That weighs in on this market index, and that would weigh in on anyone using this information to judge the strength or weakness of the stock market. True? Now, while that's been going on, we've been noting that since April 24th, we have had a rise in the market. But finally, for the first time in a long time, we have in concert almost all the stock market indices are generating lower highs, lower lows in their advanced decline. Today, on an intraday basis, when the market today was trading near its lows in the spider, the cash market, during the open outcry session, this AD line was registering a level not seen since back here on May 4th, which, as you can see, from here to there is a big price difference. We did all of a sudden at the end of the day, in like right before 12 o'clock noon, or excuse me, 11 o'clock Eastern, I think it was, on an hourly basis, the market popped and these AD lines came in a little bit. All right. In other words, they were making newer lows. They're still making lower highs. They're still showing softness in the market. So what I wanted to do on Turnaround Tuesday, because today wasn't a great turnaround, we were still negative in on the day. Tomorrow we have Beige Book, we have the unemployment report, and the market, as you can see, we are making a lower volume reading. We're trending lower with the AD lines, and it's something synonymous with all the markets. This is the NASDAQ 100. We've actually made and tried to make new high closes for the year in the NASDAQ. We just did on this day. By the way, I'll point it up to you so you can see. On May 27th, we closed at 45.42. Prior to that, the highest close for the year was 45.29. As you can see clearly, the breadth analysis moved up in concert with price on the NASDAQ 100. So it wasn't a 1 or 2 or 5 stocks that are heavily capitalized weighted to that index running the index higher. It was the majority of stocks ran up. But since then, we've had 1, 2, 3, 4, 5 days kind of sideways, and the advanced decline is fallen back down. Now, we are starting to break down. This, to me, is a concern. And I think what we're seeing is not any flip-flopping of sector leadership, because in months past, in all year, we've gone from leadership in what? Blue chip stocks have led the way. Then small cap stocks led the way. Then technologies led the way. At one point in February, oil prices led the way. Even though the world said oil was going to $20 a barrel, oil prices started to lead the way, and energy stocks started to move up. So we've definitely seen different sectors lead the way. Recently, it's the banks, the financials, since I would have to say late April, we've started to see some main banks and the financials give some upside. A lot of people were very concerned about transportation stocks, IYT. Let's just take a look there. But, when we look at the transportation sector, it's like one of the things that people maybe didn't realize is that, for God's sakes, while you're focusing in on the transportation sector crashing, guys, this thing just rocketed from July of 2012, and it not only shot like in the stratosphere, but it did so with some pretty amazing volume. Now, in the last 2 months, people are a little freaked out because you got this little correction in the market here. And granted, no one wants to see a correction in the transportation sector. But when we take a look at the longer term view, this market was holding its own. In fact, it's still kind of holding its own in here. The volume on the sell-off isn't that little, it's not really all that upsetting at this point in time. Mainly, we could take a look at some of the names, and we'll come to the conclusion real quick. When we look at the transportation sector, and we're going to come down here, and I just wanted to point out to you today, regional banks, and we take a look at the KRE. The regional banks was the strongest showing sector next to oil. Now, I'll get to transportation in just a second, but let me just take a bypass here. Here was, you excuse this little ghost where it says trend line here. That's a trade station issue. But needless to say, if you take a look today, not all sectors were doing good. Utilities got smacked down. Bond prices got creamed. But the OIH and XOP, those two segments of the market were the best performing sectors. Now, crude oil was up pretty significantly. But when it comes to looking at the banks, right there, the KBE and the KRE, KRE's right here, up over 1.25%. Semiconductors down 1.5%. So it seems that this is what this market's been doing. The market gets flipped from one sector to another, and it seems like every time something breaks out, it's big time on the news, and everyone gets excited to get in it, and they slam it down. I'm not seeing true leadership in any one sector, and I'm starting to see more and more arcing down in all the stocks and sectors in the market, and that makes me kind of more cautious and concerned that we are definitely closer to a correction than not. So that means we could probably chop back and forth for the next 3 or so weeks as we get into July, which is the premiere or the preseason for what? Second quarter earnings season. That's when we get into July, and then, man, buckle your bootstraps. I think a lot of people will head for the hills as we head into August and September, and that's my guess, and that's my prognostication based on a set of facts, not opinion, okay? And the facts are cycle analysis and the fact that we're seeing the market roll over, and a lot of these markets making newer highs, like this is the Dow Jones Industrial Average, the diamonds. I mean, big rally, big run up. And as you notice, we run up, we pull back, we run up, we pull back. We're starting to decelerate aggressive moves in the upside. In other words, when we take an upside move, it pulls back, and then it comes back, and then it pulls back, it goes up, it sustains its up, it sustains its up move, it sustains its up move. Finally, for the last, since we had 1, 2, 3, 4, 5, 6, we have not really made any aggressive newer highs over this amount of period of time. So almost every rally we've seen within 3 bars, new highs. Within 3 bars, a new high. Within 3 bars, a new high. Three bars, new high. 3 bars, new high. 1, 2, 3, 4, 5. We've got 6 bars. We haven't made new highs. And longer term volume is finally settling down a bit. This is the last volume rally high was back in, if I'm not mistaken, and I'll share that with you. There it is, November. And so 1, 2, 3, 4, 5, 6, we're now in our 7th month, and we don't have huge volume accumulation on a longer term basis. This is a proprietary momentum histogram, and as you can see, as the market's finally making or trying to make new highs, notice that the histogram is revealing that it's losing momentum, and it tells us to heed caution to this, all right? So when I'm looking at the market here and I'm like going, my God, they are flipping, and many of you probably know this because we've been talking about it for a long time. When the funds, and I'm talking the Knights, the Vanguards, the Fidelities, the mutual fund guys, not the high-frequency traders. High-frequency traders can't make a stock like FTI go up 3%, or Cameron go up 3%, or HP go up nearly 3%, or National Oil Well also move up almost 2.25%. That's more institutions. When the institutions decide to buy a sector, they buy a sector. Today, regional banks, except for Zion, all up about the same amount. Insurers, I guess they're relieved all the flooding. They're not going to pay any of the victims off and lose money, or it's not going to cost them as much. Sorry to be callous on that with the insurance companies, but in any event, we note that, you know, all the insurers were up today about almost the same percentage amount. So let me get down to what I wanted to finish the subject on transportations. And you notice that as we go down there, apart from poor little AMD up 6 cents, that makes it look pretty huge move, 2.6%. But Intel, all the semis for you know, Micron down 2%, Ambarella down, Broadcom down, Xilinx is down 1%. And then we come on down here, and we're going to get down to, come on, brother, where are you? Here, well, let me go into here, utilities. All of the utilities down about the exact same amount or around that area. That is not a stroke of luck. That is institutions coming into the market. And when you look at some of these, the biotechs the same way, transports. Now let's take a look. This is what I wanted to dig into, okay? So when we look at the XAL, that's the airline index, right? The airline index, because the airlines were a big component of the transportation. Last year, it was the rails, okay? So let's take a look at, just identify a few little rails. And so when we take a look at this market, and you'll note that this is not a rounding bottom pattern. This is not a rounding bottom pattern. This is more of a distribution top, right? And so they couldn't lay it off to the public. They got to lay it off somewhere. This is United Airlines, and now this is a weekly chart. Funny thing is while the weekly chart looks like we had a strong volume push up here, United Airlines is coming back into kind of this old shelf of resistance. We're not quite there yet. This old resistance, market probably wants to come back and test that area. The volume action speaks kind of good for this sector, which means that we're not seeing a complete destruction. Now let me take a look at Delta Airlines, because I want to dissect these airlines with you. It has a very kind of sinister or similar look in the fact that it too is coming almost where old resistance, new support, volume. Actually, Delta looks on a weekly basis a little bit since new support, volume. Actually, Delta looks on a weekly basis a little bit healthier than American. And then I want to get into American Airlines real quick. And you'll notice that on a weekly basis, they are all doing the same, about the same consideration. They're coming into that area, give or take. The old area of resistance is about where the market's coming, and the volume doesn't look that bad. So what I think is happening is we're rotating, and that's all that's seeing in this market. But that doesn't mean that the airlines can hold this sector all by itself, or the stock market for that matter. It just means that they've come into some selling pressure. They haven't bottomed out yet. This is Spirit Airlines. I don't know if you've ever flown them, but notice that not all stocks in all sectors are created equal. This bad guy, this one has on the same time frame, a weekly, he has a little, I would say, more negative volume outlook than the other major carriers do. So with that said, this is Southwest Airlines. I tweeted about this yesterday because it bounced right off of daily pivot support in like 5 minutes yesterday. There's the daily pivot support. In 5 minutes, man, they ran this thing up nearly $1. Now, it did pretty well today, and on a longer term basis, let's look at that weekly. We may form a weekly high close doji this week, And it has a little bit kind of a different situation. The volume definitely doesn't look as negative. The volume does not look as negative as SAVE, right? I mean, it kind of is holding its own from its old level of support. So when I say not all things are created equal, the airlines, while they sold off first, we might see the market come out of semis and maybe for a few more weeks be watching money flow back into another sector, right? So with that said, it's not that all sectors look bad. We just are starting to see this market grind more. We're starting to see the technology and the biotech start to come off, and that's reflective, and that's just a matter of understanding what sectors weigh on each stock index. So one of the amazing things today that we noted was that the Russell, which is small cap growth stocks, the Russell today had a decent volume outlook, both on an intraday basis and meaning the 15 and the 60-minute charts. The volume they were not breaking down on heavy volume. The advanced decline is not really improved a whole lot, which I want to give this the next couple days, but that volume kind of sneaky. We might be seeing still a couple things that we want to focus in on. Small cap stocks for the next few weeks, small cap growth stocks, and then keep your eye on the financials, and then possibly the transportation, the airline stocks as they kind of base out and bottom, because I think they may have been overdone finally. Moral of the story is it's going to probably take, and I'm going to change this from daily charts to weekly charts, and then I'm going to get into some specific stocks based on today's scans. All right, so this is the weekly chart on the S&P 500. This is the weekly chart on the NASDAQ 100. What did we do in the last 2 days to affect the advanced decline levels on a week-to-week basis? I mean, we've had 2 days of gyration in the marketplace. What did we do? Well, this is the Russell, the IWM. This is a week-to-week basis. You can see it clearly looks dramatically different than the daily. But look at the volume, friends. The volume shows huge accumulation. They haven't given up the Russell trade. And that's why it held up probably the best over the last few weeks. All right? It's not really crashed as much because they haven't really sold it off with any volume. Note the direction of the OBV here. It is perking its head up. What has happened is they've come out of a lot of the stocks, and that's why we see the advanced decline down. So that can actually change at the end of this week. If we start to see more accumulation and you start to see the advanced decline in the Russell start to perk its head, then, friends, I'm looking for maybe that's where the strength or leadership will come from, growth stocks, small cap, in the next maybe week or two. Maybe that's what's going to happen. They come out of high-flying semis, technology names. They come out of maybe they come out of the biotech. But, man, this market has been a sector rotation, and I don't think it's going to stop rotating. In other words, if the market, this is what it's been doing, I think it's going to continue to do it, at least into the next few more weeks as we head into July. And then when we get into July, at the end of the month, that's when we've got to take a serious look at the construction of the market. As it is right now, we had short-term sell signals, and we had still longer-term trends intact. In fact, that's what I kind of wrote about this week, and you can find it on the blog site. If you're not familiar with it, we put it together in our trading community for our traders. If you go to blog here, go to blog, you can just go continue reading, no passwords, and pretty much so we have a daily short-term negative outlook with longer-term positives. So that's the tricky. We have a caution flag, and that's been the message. So after yesterday and today, is that caution flag removed? And the answer is no. Look at the weekly NASDAQ. This rally has been on declining volume. This rally in the NASDAQ. So when I say, oh, by the way, I think they may be coming out of what makes the NASDAQ move, and two things make the NASDAQ move. What makes the NASDAQ move? Biotech, high tech, right? Certainly we know Costco and Starbucks and Tractor Supply's in there, but that's not the heavy weighting. So on a week-to-week basis, the NASDAQ looks like it might be overdone. The volume levels don't look healthy, number one. And number two, we definitely start to see the advanced decline start to arc and trade lower. So that means they are seeing the breadth in the NASDAQ 100 is starting to decline. So to me, I think maybe that's what we're going to start to see, less focus on technology and maybe more focus in the weeks ahead or the couple days ahead in the small cap. Certainly that's what the indicators are pointing to, and it's up to us to kind of monitor that. The fact that oil prices, and I wanted to just briefly mention a few commodities. So, crude oil, a couple things. We went through this in our trading room this week, and I'll go through it with you real quick. And we're getting there. Large specs, I always like to make them green, and I like to make them a histogram, and I like to hit OK. There we go. Okie dokie. All right. Well, this is all positions, not what I wanted to show. I wanted to show futures and options, and we will have to go back over here to do that. And there it is, and turn it on, and please work. Excellent. Okay, so this is the Commitment to Traders report, one of the market factual data sets that we've had to help us navigate the markets a little bit. In looking at crude oil, the first thing that we noted that for the last week or so was that the small specs actually went net long, and I'm going to change this to a daily chart. It shows it a little bit better. You can actually note that the small specs, the zero line histogram shows when the yellow lines histogram are below the zero line, that means the small speculators, the one lots, the retail trader, are actually net short. When it's above the zero line, it shows they're long. As you can kind of see in the marketplace, every time they've gotten long the market here in the end of April, March, in this time period right here, carry it up, they got long, and the market went down. Then they decided to go short the market, and then the market went up. And then this is a really sad story. They stayed short the market, got even shorter, and the market went up even more. Then they decided up at this point in time through the last week of April, the first 3 weeks of May, to finally get long. They got brazen, they got courage, they got funds, they got long, and they got longer, and they got real long, and then they doubled up, and then the market puked on them, and then they finally went last week short the market. Last week they went short in the hole, and then, therefore we now have about a $5 rally in crude oil. I don't know how much more they can take that type of pain, but when you go long at 60.5 and you get stopped out at 56.5, that's $5,000 to the downside and it's $5,000 to the upside. But needless to say, that's been kind of helping us understand what the market could do. And from a seasonal perspective, crude oil still remains strong, the market. Our volume analysis has aided us also in helping to determine what side of the market to be on. Today's rally, actually, when we were closer to the high, we had a nice little breakout to the upside day trading in crude oil today. I think our room benefited from that. Some of our members with this information have had exposure with OIH and XOP. Today, we see a market that rallies, and then finally, if you'll note here with this little volume indicator, we didn't see a very significant new change in volume. We saw a significant change in price over the last 2 days, but not in volume. So crude oil prices, while I'm more inclined to believe that we're going to, test the highs tomorrow, we've got being Wednesday, the beige book. We also have the Department of Energy reports out. We might just see a little bit of a pullback, and I want to watch not how the market opens and trades, but more importantly, how the market closes. So when I go back to, if I may, here we go. All right. So you can clearly see the seasonal trend on crude oil is to the upside, right? And the weekly OBV, the weekly volume action, has been pretty promising. Friday, going to be very, very important to the market for several reasons. Number one, this is our monthly person's pivot outlook with a weekly chart. Last week, you have this type of doji pattern, and we may close above last week's high. To me, that would be indicative of an ABC continuation pattern, at least testing this high, if not even higher, in the month of course, June, which, of course, in June, as you can see, people start planning for vacations, they start to travel, and, that's kind of like maybe what we can't see is demand. What we can see is supply, and that's where some, combining technical analysis with seasonals helps. This red and green are actually, to believe it or not, the weekly person's pivots. Instead of horizontal lines, I just made it a connect the dot line chart. This is kind of an interesting aspect as we came at or near the weekly pivot resistance. Another thing that happened is that we started to see on an intraday basis the volume, which we alerted the trading room today with. As the market started to rally, we started to see the volume taper down on that rally. So in other words, we made, and here it shows it best, we started to rally pretty significantly, and we didn't have huge, strong volume in behind that move. So here's my thinking. I think if the small specs, who were, as we shared with you on the trade station, were, and this is showing us, I want to only look at the speculator's position, which is what I did with TradeStation. What I'm looking at here is if the specs were short crude in the hole and they just took a, 3, 4, 5 day from last week's low of 56.5, I mean, let's face it, if you were short in the lows for the week and then you had to get out today, that was a $5,000 move on a one lot. And trading commodities is like eating a potato chip. I don't know many people that do one lots, right? And so for a swing trader, position trader, God, that's got to hurt. So the moral of the story is the weekly volume, Friday will be kind of important because we're coming up to whether we see continuation on an intraday or intra-week basis. We've probably had a short-term peak in price, and we'll probably come back down. My guess is for tomorrow, we could easily see, as I talked to the room today up here, you could easily pull back to tomorrow's support, right? You got into like 60-50, 60-30, something like that. It's almost a 2% pullback from the high, from high to low, from coming in expansion to contraction of range. If we come into this value of support tomorrow in crude oil, that's about a 2% pullback. That's easy, very simple to do. Now, one other market that I wanted to address is the disconnect. Bonds were down, the dollar was down, crude oil was up, gold. What's going on with the gold market? So gold is, probably one of the worst times of the year to be long, and that's probably the drag, is that we don't even really start looking at gold until July, right? But I would have to say that I thought this market would personally see a more sinister decline, and especially over the last few weeks when the market was trading and we take out that swing low, we broke down, we didn't have follow through, it snapped back. So the market here might be just forming a little bit of a, what we would call a descending triangle pattern. The monthly volume, as you can see, is starting to perk its head up a little bit. So in the next few weeks, and as we get into July, we have a doji over here. If you know my work, you know that we run after long downtrends, and then we close on not a daily basis, but on a monthly basis above that high. We might be forming a potential high close doji, and we would be watching that going into July. So by the July expiration or the end of July month, if we close over that high, we have a potential monthly high close doji, and that might be different. And it's kind of funny because we get into some seasonality in the market. But this is what's probably been holding the market back. And when we take a look together here real quick with the euro currency, the euro, while everyone thinks no doubt it could go to parity, it could go to 84. It's been there before. It started out of the box back in way over here. It started out at near 84. So could it get back down there? Yeah, it could get down to 89, 90. Sure. In the next 2 weeks? No, I don't think so. From a seasonal perspective, we were actually looking for the market to rally a bit, and it did happen. We see that seasonally the market moves up. We had good volume accumulation over the last few days, right? Here's the volume accumulation. Clearly, you can see the market, and we actually warned our community about this. Market went down, and it went down on pretty insignificant volume. And so now, guess what? The market's run up. We had a huge run up today. So the funny thing is with the dollar falling, that means the euro goes up. Gold should have had a much better day, and it did not. Interesting is that the volume on a weekly basis looks pretty significant for maybe a retest to the upside. This week, by the way, we are going to form a weekly high close doji. Let me share something with you. Go over here. Let's change this to the euro currency. So this is the euro currency, and these are the small speculators. They're very short the market. The small speculators are hugely short the market. And as you can see, look at the volume accumulation. It's kind of like that serpent, right? I mean, if volume precedes price, we probably have a little bit more upside, maybe 114, 114 and a half. So over the next couple days, if you get any miraculous pullbacks, watch for intraday buy signals, my guess, between 109.80, 110.20, somewhere in that 40 pip zone in there. We should see some type of, if you get a pullback, you'd be a buyer there to go with trend. We already have a generated PPS buy signal. I don't want to diss my brother and brethren's using Thinkorswim, so let's take a look at this. I wanted to go through and run a scan with you in the S&P 500 and say, well, how did today's, and this is the PPS, this is the person pivot study buy signal, did we generate a lot of new buy signals today in the S&P 500? And the answer is not really. Only 22 stocks we generated. One bank, Zion, we already talked about it. Some insurance, it's just kind of mixed. So how about sell signals? How many sell signals? That would be kind of nice. On a day like today, did we generate new, fresh sell signals? We actually generated 27 new sell signals. Where did they come from? Utility, 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 utility. Oh my God, utility, 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 utilities. Utilities don't look too good. Next to that, look, semi, and look at those names, right? Microchip, Intel, and Micron Technologies, INTC, MCHP, and MU. So we know that based on today's scans, utility sector's probably not the place to be. One that I wanted to, I'm glad I ran this scan for you because I want to show you QCOM. QCOM is an enigma to me, and I'm going to share you why. And this seems to be the general story of the market. And here's what I wanted to share with you. Look at the monthly volume seems to be in a recent downturn, and prices have been in a downturn. Look at the weekly. The weekly looks fabulous. The weekly looks pretty good, right? I mean, it looks like it's accumulating in volume on an intermediate term time frame. Then when we turn to the daily just, I mean, there's no main volume players on a daily basis. And this might be what is very indicative to a lot of the stocks that I've gone through, where we have this disparity between the longer term looks good and the shorter term looks horrible. And that might be this liquidity crisis, or not a crisis, but the fact of liquidity. The market doesn't have any follow through because no one's playing the market. I typically do not like a stock that looks like it's holding its own, but yet has a huge volume detrend or downtrend to it, such as QCOM does. So QCOM did generate a daily sell signal. It shows up on TradeStation. It shows up on Thinkorswim, and it is atrocious. So today I run a scan for you guys and myself actually, and I look at this scan and I go, well, this is a different, kind of a different scan. Of course, Zion shows up. On TradeStation, I actually show today 66 stocks generated a daily buy signal. This is Schlumberger. Here's one, Shutterfly, because I have, and I'll share with you, I have in my symbol universe my own private list and the S&P 500, and that's why we have more names populated. So the moral of the story is certain stocks, Shutterfly, trend consolidation might break out, weekly volume not looking great. You know, this is kind of like maybe what we might see is, and I want people to kind of focus in on, is we might see sector rotation into some of the social media names. This is Pandora. Pandora daily chart not going anywhere at all. It's sideways. The volume reflects that. The longer term, the weekly, it's had a pretty nice little run up on Pandora, and it has had a little accumulation. Now, Pandora is an $18 stock, and I'm sure it's not going to generate a whole lot of interest. But the funny thing is that we got LNKD, which has in the last week or two started to see some accumulation, and baby, it's got a long way to go. Note that even with today's price action, we really haven't seen a lot of volume come into the market, even on the weekly basis. Long-term players are just absent from this one. Let's take a look. TWTR, Twitter. Twitter's the same way. I mean, it's got a long way to go, baby, before, look at this. This is Twitter, and this is pathetic. Twitter's showing more or less resolve of holding rallies than probably any of the stocks in this social media sector. That was not a very good day volume-wise for Twitter. It's going to need a lot to get this thing going. BABA. We talked about this in the trading room. This is one we tweeted. We took a nice short-term trade to the upside, hit our profit objective, bought a pullback. This market, if it's going to get going, there's two things it needs. This market, if it's going to get going, there's two things it needs. and it needs to get above that gray line that you guys see here. It's called the last conditional change. Today, it formed a doji. That's why that candle is blue. So if we can get Baba, Alibaba that is, to actually generate some, trend movement with the weekly upside signal. We did get some decent daily volume accumulation here. We just need to get the market closing back above 9150, generate that. Watch Baba in the next couple days. This might be a sector or a specific stock in that sector that we could see further gains. So when we take a look at other popular names like FireEye, one thing I got to tell you I'm a little concerned about is a stock that rallies and the volume doesn't associate with that move and we get negative momentum, a couple days of doji, I'd be cautious on this name as well. And the fact that it is in that sector, technology, software programming, look at the weekly volume. I mean, something doesn't it just doesn't add up. Something doesn't add up here. The sector, and I think that this is what we might be seeing, sector rotation. So it has been kind of tough. It's going to be picky and choosy to be with the right stocks in the right sector. But I tell you what, the message is I think you want to be very attentive to your long positions in semis. You want to be very attentive to your long position in biotech. These are names that we might see a rotation out of. And I would say for the next few weeks, watch your small cap and your energy sectors. So I wanted to go through some of those names. Sell signals today in both my sectors. I actually had 53 names. You'll see a lot of them. Here's a technology name, SanDisk, poor SanDisk. And by the way, look at SMH. Today, incidentally, it generated a sell signal just on the scan itself. There's Micron Technology. It shows up just along with the Thinkorswim scan, and it doesn't look that promising. Anyway, I just want you guys to get a feel for what we are in for. If it seems a little bit confusion, baby, we've not really been that confused in this market this year. I'm pretty, we've had a couple times that we've had some spookiness, but right now, I would have to tell you, I'm getting a little bit, this volume is now bothering me, not on a daily, but the weekly basis. And if this thing rolls, there's a couple reports, and I think A, beige book might have some influence, B, employment number is going to have some influence, and if it's not this employment number, it's July. So this is the time to really kind of pay attention. If you've been bullish, you've been enjoying the ride, I got news for you, man. It's now time. And you're hearing it from a guy who's been buying all the way up. I'm not like been short since 1400 and telling you there's a crash every time the market goes down every day. I'm sitting here talking about this market from multiple facets of factual data that we look at is starting to show signs of turmoil. And I just want you guys to maybe look and see what runs the market itself, and you can kind of get your own AD level line and find out where is the strength and weakness coming from by, even if you go to, let's go to Russell just for a second here. Russell 2000, there we go. So let's take a look at the Russell. And then today in the Russell 2000, we only had 13 stocks generate a sell signal. Let's go over to buy signal. Wow, 43. So twice as many buy signals in the Russell 2000 than sell signal. Let me go over to the S&P 500 one more time with you guys. I don't know if this makes sense about what I'm about to do. So in the S&P 500, we had 22 names generate a buy signal. And then you go over here to PPS sell signal, and let's see. We had 27 generate sell signals. So they're actually relative to buys versus sell on the, let's say buy and sell list. Russell had better performance today than S&P or for tomorrow, illustrating that we had more stocks generate a buy signal in the Russell. So what that should help you substantiate that there's actually strength in numbers coming up with that volume in the Russell over possibly in the next couple days. So maybe that's where we get the strength. Markets come out of, and then just to prove a point or just to satisfy my own curiosity, let's change this to PQRSN NASDAQ 100, and let's take a look at the NASDAQ 100. Semis, technology, Sanders, media, SIAL, chemicals, all right, and now let's look for buy signals. Ooh. Baidu. Well, Baidu's interesting because that's the Chinese, so maybe Baba, Baidu, maybe, you know, that old China connectivity there. Citrix and Dollar Tree, whoopee-doo. Obviously, you can see we had more sell signals, definitive sell signals in the NASDAQ, definitive more buy signals in the Russell. That kind of maybe helps substantiate the point I'm trying to make and what all these yellow gobbledygook lines kind of represent. It means that we've got change of the guard, and if everything's not running in sync, it's not a broad-based rally, and it's going to be more confusing out there, and it means we got to be a little bit more sharper to what we're looking for buy and sell signals, especially for stock traders. I want to make a public service announcement, if I may. I hope you got something out of today. We talked about where the strength in certain commodities are with the euro and crude oil. We talked about sector analysis. We looked at the markets from a testifiable standpoint. We ran scans. If you don't have TradeStation, we talked a lot of love there with our friends at Thinkorswim here with running how effective it is to run these scans. And that's kind of what we've been, the power. Most people say, oh, Person's pivots. Yeah, you do that pivot thing. And that, to me, I chuckle because it's a little bit more than Person's pivots. And what it is we have a PPS buy and sell indicator. The Person's pivots is actually a lot more to it than what people think. Now, what you guys don't know in Thinkorswim, what we do have is the Person's pivots with a pivot point moving average. And that's the missing link, which is that gold line. And that gold line is a moving average component of the blue lines. So what we do is we actually look for a change of scenery, so to speak, or a change in direction. When the blue goes above the gold, as you can see, like at the end of that time frame, it calculated for the next week out. Blue was above here. Let me do this for you. Okay, so at the end of if pivots are calculated by high-low close divided by 3, at the end of that week's close, it calculated for the next week out the pivots. Notice that we had a flip. Blue was under gold. It's like a short-term versus longer-term moving average, right? When the short-term is underneath the longer-term is gold. When short-term under longer-term, market bearish. When we start to see a flip from bearish to neutral, and all of a sudden you get a boom, a flip, blue above gold, it starts to give us an indication that the market could trend higher, right? So that is the Person's pivot indicator. Most people miss it. They don't understand it. They just look at the high and low and think that, you know, well, it didn't predict the high and low. It actually helps us to predict and understand there's a trend directional change coming. It's pretty savvy, it's pretty snifty, and it's pretty slick. Most people miss the power behind it. I've been trying to explain this a little bit better with, you know, in doing seminars and sharing with people how to use this more effective as a tool, and I think we've gotten the message around a lot better. It definitely is the filtering element behind the market. So like, for example, if we look at daily charts, and we have a 60-minute, just to share with you, a 60-minute chart, right? So when you start to look at a change of scenery, and you start to get that blue above gold, flip, and you start looking at, let's say, the crude oil, because we were on that. So all of a sudden, let me clean this up here. Here we go. So all of a sudden, you start to look at something's changing in crude oil, it breaks out, and all of a sudden, blue at the end of that day above gold. And the market holds pivot. And you know that if blue is above gold, and you've got some volume accumulation, and you can clearly see as price is moving up, and you've got small speculators short the market, remember they were short from way over there, you're probably going to get squeezed. And then you start to see, as the market trends higher, you start to get a volume change. Now, blue above gold means the market goes up. And then when today, note that we actually, person's pivot actually just nailed it. Right at daily resistance, we start to lose volume momentum. And then that way, even if you are longer term bullish the market, even though for tomorrow, it's still defining blue is above gold for tomorrow. It's still defining a bullish day, but it allows you to say, well, you know what, maybe I should take some profits off the table, and if it dips down here tomorrow and I get a buy signal, I might be able to go long again, or, get back into the position and save myself some trade. And in uncertain times, this is a fabulous tool that has helped us to determine, hey, if the market's bullish, look for some buy signals. End of story. So, when you take a look at that with like other stocks, and I love it when people say, well, is it effective with stocks? This is QCOM, by the way. This is a 60-minute chart. If you take a look at QCOM, and you look at this move that we had, by the way, and you see like that is a major concern on an intraday basis. Tomorrow, we're in a trading range. Tomorrow, blue is above gold. If Google's going to be bullish, if it, by the way, pulls back to the support levels, which is about $4 from here, and you get an intraday buy signal, then you may look to go with that directional trend change in the marketplace. All right? So what did we have today that popped up on a buy signal that's kind of in that space? Baidu. Oh, look at this. Baidu generated a PPS buy signal, and it's probably in a, not yet, it's not in a weekly buy yet, but look at the daily, blue above gold for tomorrow. So how I would look at this is if tomorrow Baidu trades back into that support and you get an intraday buy signal, define intraday buy signal. I don't know, let's call it a 15-minute buy signal, 15-minute high close doji. So if tomorrow we pull back, it's giving you a projection Baidu is still bullish for tomorrow, and it's saying if the market pulls back, God forbid markets open lower, trade higher. I've never seen that around. Maybe we get a change of guard where stocks that have gotten the Dickens, the ugly stick beaten to them, right? I mean, this one is in that camp. Stocks that are over accelerated, like in semis and biotechs, maybe they come back into some of these names short term. After all, there is kind of a gap in the market up there, and we are in a daily buy, so you can kind of use those tools effectively to help you define, is the condition of the market bullish, and if so, maybe I should look to be buying against support. That's the power behind the person's pivot indicator. It's not that it gives you one resistance and one support. What it does, noted that if it is bullish, it gives a higher high and a higher low. So it not only defines what the market condition is bullish, it gives you an area to look at if the market gets down to that level, then use a shorter term time frame to see if you can go with a small pullback and see if the market accelerates to the upside. That I think is one of the most effective ways that I use this tool and teach people to use it. I wanted to do a shameless plug, and not a shameless plug, but also to let you guys know if you're interested. We have mentioned this before. Saturday is our first day. If you are interested in signing up and learning more in how to use my specific tools better, mentoring course, we have 3 weeks, Saturdays, 2-hour days. You have instructional videos that you get to utilize, and we are going to go A to Z in how to do correct my methodology of stock sector analysis, my specific market breadth and volume analysis, my top-down trading approach, ins and out of seasonality plays, my top 3 option analytics and top 3 strategies. My commitment to traders report is what we call that legal insiders trading, which is something that we use time and time again, the COT data. And of course, how to create your charts and your scans, risk management, stops, my last conditional change levels, and position sizing guidelines. It starts, the first session is this Saturday. It will be recorded. If you're interested in finding out more about that, you can click on this link. I just posted it in the trading room. It is an incredible value. It is, in my opinion, I think, one of the best presentation package for education that we've put together. This is the 2nd year in a row that we've done this. Click on that link. You can read more about it. If you have questions, you can certainly call our office. And the number is 561-655-1881. We have numerous students already. That's, again, a typo. It's 561-655-1881. Enter. There it is. Nope, that didn't work either. 561. Let's try this again. 655-1881. And you can talk to myself or Mary. Mary probably will take it. Anyway, there it is. Our mentoring starts this Saturday from 9 to 11 Eastern. We do live review of the information. We go over the information. We do that. We spend 3 weeks together live on Saturdays. If you can't spend Saturday or you miss one, we record it. And you also have the recordings of all the sessions. There's approximately, I think it's 12 hours of tutorials and material that you study. This is outstanding information, quality, institutional grade information, and I feel some of the best stuff that's kept us in the market and the right side this year, last year, the year before, and throughout my career. With that said, I hope you found interest in tonight's quick end of day presentation. If you're interested in the summer mentoring, just click on that link. For my community members and for those in the trading room, we'll look to do it all over again tomorrow. Have a great afternoon. Take care, everyone. And that does conclude today's session. And I did record this, and I'm now going to hit the stop button. Awesome.